Got me falling for the same things again. Back here at the start, and now I'm stuck in the same place we've already been. Let's go back to the place I wanna be. I wanna be alone tonight. You know, baby, I know my own. You know, baby, I wanna take you home. Let's go. I don't wanna stay. What happened to us was patient. Been months without a single conversation. All the nights to the temptation. So tell me, higher than the ceiling. Get till I'm feeling. Need that sexual healing. Are you gonna come around? And now we're back again. I shouldn't have fallen so hard. Got me falling for the same things again. Back here at the start, and now I'm stuck in the same place we've already been. Let's go back to the place I wanna be. I wanna be alone tonight, you know. Baby, I know my own, you know. Baby, I wanna take you home. Let's go. I don't wanna stay.
What is up? What is up? 360 in the house. My goodness. So these are my reading glasses. Because I'm 50 and I cannot read my supplement bottles at all. I can't read anything. But it's funny because I can't see anything with these on from a distance. I can't see the screen at all. Like at all. But if I need to read and I don't have them on, I can't see what I'm reading. So anyway, yeah, reading glasses. What is up? Hopefully everybody's doing good. Welcome to our new thing. It is new in multiple ways. One is new because, hold on. All right, this is the real 360. This is Snickers. This is where all the charting comes from, the mind of Snicker snacks. All right, and he's a daddy's boy. All right, so this is new. So what we're doing here is we started about 5 weeks ago, maybe 5 weeks. We started doing a weekly YouTube live. We started on Monday, and then we moved that to Tuesdays because everything that we do in the 360 Trader, we're always trying to make it better. And so I thought it wiser to, instead of having one on Monday, where market conditions can change very quickly at the beginning of the week, go ahead and watch Monday's market action and then give a good purview of how the market looks on Tuesday. And then what we decided to do was go ahead and let's finish off the week with something. Since we're not doing a Monday to start a week, let's finish off the week with something. So we're doing 2 lives. Yeah, so this is the start of that. And so that's more than likely going to be every Friday. Again, same type of premise. It's going to give me an opportunity to cover any changes from the video from Tuesday, but also kind of keep you in the loop as to the total persona of the crypto market as a whole. Now, look, if you want literally the 360 elite, the elite of the elite, that's 24/7. including all of my portfolios, all my trades, you've got to join the 360 Elite. But again, my goal with this is to bring some level-headed, common sense analysis that's giving you a complete picture of what's really going on in the market, so that you're not driven by FUD and FOMO and all of the narratives that you see posted nonstop on crypto Twitter and through the news media outlets. You know, if you guys that have been with me, if you've been following anything in the news based on the economy, wars, and so on and so forth, and if you've been following the apocalyptic folks, look, I'm a prepper. I believe in being prepared. I've always been that way. It's in my blood. But there's common sense, and there's learning how to be able to see through the smoke and mirrors of reality versus what people are trying to scare people with so they get hits. You know, it's news. I mean, so what's funny is for the last, since COVID, for crying out loud, the same apocalyptic people have been calling for market crashes since then. They have been wrong since then. Outside of initial knee jerk, they were wrong. You know, they called for the end of the world, apocalypse, collapse of banks, blah, 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 so on and so forth in COVID. And you did get a knee jerk reaction, but what happened immediately thereafter and throughout COVID? A massive bull market. Yep. And then what did we have this last year? We had, the talks of, we have horrible economy with inflation. So good, so good. And then talks of wars and saying, hey, the market is going to take a nose. I've been saying, this is not new. Okay, they've been saying this for years. And I said, those that have been following me since the beginning, I've said it for the last 2 years that 22 to 24 into 2025 would be one of the biggest bull markets that we've seen in ages, and not just for legacy markets and stocks, but also for precious metals. All of it has come true. Precious metals have gone ham sandwich. You even have silver, which is a laggard, hit 35 and is getting ready to move towards its ATH at 50. Yes, $50 per ounce of silver. And that doesn't even break its all-time high. And then you have gold, which has absolutely destroyed its all-time high and is going nuts. Tapping to the T, my first target at 2,800, to the T, 2,800 before getting some consolidation, possibly even some pullback before this goes ahead and touches 3K and potentially even higher than 3K. I think is in the works, especially for 2025. So legacy markets, index markets, stock markets, precious metals have done exactly as I prophesied they would. And crypto will too. Yes, crypto will too. And the cool thing is, and under the guise that every macro chart you can look at, as my 360 Elite know, because they've seen all of it, we are not coloring book chartists. We are literally looking at absolutely everything that you can put your eyes, your ears, your hands on when it comes to the crypto cycle. Now, the thing about that is we're doing this while allowing there to be unique differences from cycle to cycle, because there are. All we need is there to be a cycle, okay? But there are some incredible, and there's some that nobody talks about that we already seen. You can see it, like it's just there. One of which I finally I actually posted just the chart on Twitter, just the chart. I didn't put any description. And it was the pairing between Ethereum and Bitcoin, which a picture is worth 1,000 words. But unfortunately, if you can't understand that photo, you have no idea what you're looking at. And it's the parity, the relationship between Ethereum and Bitcoin and how that is evolving from cycle to cycle. It's undeniable. It's not even debatable. Like, it's just there. It's right in front of you. But nobody, I haven't seen a single discussion on it at all. But anyway, so the good news is you get 2 videos a week. You get one on Tuesday, you get one on Friday. And this gives you an opportunity to literally be where you need to be in a settled and calmed manner with peace. You understand? Everything I do from a place of peace. Everywhere that, I'm pretty charismatic, but trust me when I tell you, I'm always at peace. I never am in fear, and I never panic, and I never FOMO. I don't have any of those issues. They're not in my blood. You know, when I was a rookie, and I started trading stocks back in the .com era and cut my teeth there, sure. But you learn, you adapt, and that's why people subscribe. A lot of my subscribers subscribe for that alone. Like beyond the trades and they subscribe because they know literally that they're going to get a level-headed view perspective. Okay. One that is not just bullish bias and one that is not bearish bias. We're literally looking at the dynamics of the total market and we're going from there. So, yeah, so that's where we are. So I want to kind of, I don't want to spend a long time on here, although I feel like I've been talking forever. Once you get me started, especially on crypto, it's hard to get me to stop. And Nash, my one and only right-hand man, is like, hey, try to keep these shorter. You know, he would like it if these were 10 to 15 minutes, and they're usually 30 minutes. And that's a problem, but we'll fix it. Just not today. Just not today, Nash. All right. So let's go ahead and look at, oh, I need another sip. Oh my goodness. It is so good. That is so good. All right. So I'm going to do a screen share. I'm going to talk about a few things that have transpired, things that I like, and things that I'm anticipating moving forward. All right, let me see if I can get this set up here. Bang, bang, bang. Look at this. Like we have arrived. We have arrived. Like we have finally reached the point where we can do share screen, show my ugly face, and do share screen, show my ugly face at the same time. I know. We're experts. I know. Oh, I am the most non-tech savvy person. And if it wasn't for Nash, we would not exist. I'm going to tell you right now, we would not exist. So the first thing I want to do is go over something that I find hilarious. Let me pull up the right chart first. Let me pick one. No. I'm trying to, let me see. Maybe this one will work. Okay, we're going to use this one. Let's just use this one. Okay. So just ignore some of this other stuff. So first of all, if I hear one more person say we've got to sweep the lows again, I'm going to lose it. Okay, I'm going to lose it. I don't understand the concept now. And I'll show you why. I just don't. Okay. And let me just show you why. All right. Here we go. All right. Here we have our initial pullback, our initial profit taking. If you're calling this profit taking, if you're calling this selling, you are correct. That is exactly what is happening here. Even a little distribution, but a little, not end of cycle, just some profit taking, and you'll see it in volume. But here is the base of that, and sweep the lows. All right. Everybody see that? Sweep the lows. Sweep the leg. All right. Then we go into another big bounce, another big range, and sweep the lows. Sweep the leg. Sweep the lows. Number two. Then we enter into the accumulation area where we have the global liquidity event. I've said this 1,000 times. You should literally be able to look at the chart and see this, okay? And sweep the lows. Not once, not twice, but thrice. That's right, 3 times. Bears swept the lows 3 stinking times. But you want another one. The problem is you want another one in a completely different market structure. We've talked about this and I've shown it to you in volume as well. So what I want to draw your attention to is the third sweep of the lows, which ended up being a global event across all markets in all continents, in every country, every island, every state, every market, every one. The shakeout of shakeouts, if you will. That's right. That's why very few are actually in stocks right now. Because again, apocalyptic folks came out of the woodwork here, calling it the end. And instead, NASDAQ sets new highs, Dow sets new highs, S&P continues to set new highs, gold continues to set new highs, silver pushes to 35. After this, after spooking everyone out of the market, 3 sweep the lows with 1 massive global event. And by the way, I want to show you how significant this is. This is the major trend line from early in the cycle for Bitcoin. The major trend line, it then leaves the station. Most probably think this will never touch again. And most would abandon that trend line. Stay with it. Oh, wow. What in the world do we have here? I actually teach this in my course about not abandoning these long-term, long-range trend lines. None of this touches it. Only the global liquidation event. And we're talking about 195 days later. 195 days later. So when you have what you have here, which is obvious accumulation inside of a major bottoming formation that includes a nasty bear trap in the way of global liquidation. And now, and I told you guys this last video, you have a completely different thing happening here. Watch it. Watch it. I'm going to show it to you. You have this leg up on a visible accelerated or increasing volume profile. Not decreasing. Increasing. And this is the same education that we used and that you can use to prove that this is a pullback. Because when you get pullbacks, you get decreasing volume. Decreasing volume, which is what bulls want to see in a pullback. Representing this is not end of cycle distribution. There's no distribution. We've talked about this a million times. If you're new, you need to go back and watch my YouTube videos. Ending with a final peak volume wick that ended the pullback phase. Enter the reaccumulation phase. Now you have a new leg up with higher lows and higher highs. Are we still inside the ultimate range? Yes, we are still inside the range because we have not broken this high. And that leads me to my next point and one of my favorites. And we're going to zoom in on this. Check it, check it. So we talked about, let me pull up a different chart for this one so you can see it a little bit more clearly. Yeah. All right, here we go. I'm going to mark the high. There it is. All right, here we go. If you remember, I talked about the liquidity stacks. Here, this is a double entendre. They reach the same. So you have one here, here, and one here. This has grabbed all of it except the final liquidity pool. And what I love, I'm very glad that this didn't go grab that first and then pull back, because I would anticipate a deeper pullback if that had occurred. Instead, it did not. It grabbed all of the liquidity from these highs, but left this one. That's right. It left the liquidity here and pulled back and pulled back. So I'm expecting some form of higher consolidation. Yes, some sort of higher consolidation. Don't know where. We have to watch today and into Monday and Tuesday. Another sip. But I love that it didn't just go through, grab all, leave a nasty wick. Matter of fact, there's been almost no wick, almost no nasty bear reaction. And if you guys are calling yesterday a nasty bear reaction, that is your nasty bear reaction? No. Liquidity is up here. We're pulling back, more than likely reconsolidating. I don't know what that's going to look like yet. Matter of fact, right now, I think it just filled an FVG or a higher liquidity pool here. I'll show it to you. And that is exactly what's happening. I'll pull it up on a chart where I already have it drawn. Boom, boom. There it is. So just like I told my elite, this would come back into this demand zone because of where that is. It did. And now it is now filling this liquidity made possible by this red candle. So it's what happens up here and in this area. And by the way, it's Friday. So you know how the market loves to leave us hanging on a Friday. So don't expect all of this to occur today. I would love for this to push up here and then just go ham sandwich today. I would love that. But it's Friday. So the odds are this fills and we dingle dangle up here. Oop. Up in this. The odds are pretty good that we fill this and we hang out up here. Yeah. And then maybe Monday too. I mean, look, I would love for it to happen today, but this is it. Right above here is where that liquidity pool is. Again, I love that it didn't grab it first. Instead, it pulled back first. That makes it, for me, way more bullish. Because, here's why. Because what we want is this. We want this to break on a steady foundation. You don't want your resistance to break from a long distance away. All right. So say this started way down here and it smashed this level. Well, the odds of that holding or that being a fake breakout would be very high. You don't want that. Instead, you want to attack it and get rejected. And then attack it from a higher low. And attack it from a higher low. That way, when you get your break in your liquidity grab, then we get something like this. And this is just me surmising. You get your pullback to mitigate the all-time high. You break it, pull liquidity, but you've already dipped down here. So you've already handled all of this. You understand what I'm saying? You've already dealt with the orders here. That's what we're doing when we pull back. We're handling the orders here. The liquidity here has been handled. It's been handled. So the odds of this pushing when it pulls back, unless mass sellers come in, there's no reason to come back down here. Instead, you can push through, grab the liquidity, break the ATH, pull back, mitigate, and boom, you get your next leg. You get your next leg. Yes, this is what we're looking at. This is what we're looking for. There's still a lot to see today and into Monday, but I love that this is pulled back. Please tell me why you feel we need to sweep the lows again. Tell me why. Why? You had 3 shots. Bears beats Battlestar Galactica. You had 3 shots to sweep the lows. You know, not 3 shots. You swept the lows 3 times. There just isn't the distribution at the peaks, at the tops. It just isn't there. It's not there. You cannot show it to me on any exchange, on any chart. And for there to be a top or an end of cycle where that's it, there must be distributive selling. I just made up a word. There must be. There must be. It's not there. All right, I have gone on for almost 30 minutes. I got to cut this off. I had more I wanted to say, but we got to cut it here. Look, if you're not elite, you might want to get an elite. We're getting ready to set up a few lotto trades for the election. Yes, a few lotto trades that could go ham sandwich if a certain person is victorious. I don't care about your political view. It's not what this is about. This is about making good money on a potential election. We're getting ready to set that up probably today and through the weekend. So if you're interested, you got to join 360 Elite. Just go to our website, subscribe to the trade alerts, and let's go. Until next time, baby. By the way, thank you for joining me. And I forgot to say at the beginning, we are sponsored. Our videos are sponsored by the one and only, the lovely 4cmediaco.com. Follow them on Twitter. Go to their website, and you will have every piece of breaking news for global finances and crypto that you could ever want. Love ya. Until next time, baby. Here comes the boom.